Good morning, traders. Bonjour, mesdames et messieurs. Guten Tag oder guten Abend, meine Damen und Herren. Salam alaikum, shalom, kalimera, and all the others. There are so many. This is episode number 2434. It is Wednesday, Fed Day, the 22nd of March, 2023. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, well, let's get a mic check first. Make sure that I'm actually talking to somebody. Quick mic check, please. Let's take a look at the convergent trading pre-market summary sheet. Again, you can get this by following on Twitter, twitter.com/conv trading, CONV trading. This is posted at about 8:50 every morning. I thought Swedish was hero, something like that. And you can grab this directly from there. This is shown live here. Again, FOMC rate decision due date. Today, we're expecting the decision at 2 o'clock. This is a big one. There's a significant divergence of opinions on this one. The models from various analysts are pointing in all kinds of different directions. The expectation is that the dot plot is likely to be hawkish, while the news conference is likely to be dovish. But the expectation is there's a priced in Fed fund rates probability of about 80% currently. I'm pulling that up right now as we speak. Here you go. Wow, it's climbed up actually. See, it has really climbed up. It has gone from about 70% to 85% yesterday to 87.8% that the rate will go up to 475 to 500. It's currently at 450 to 475. So however, the question is not whether they'll raise or pause alone, although that's kind of been debated to death, and we'll just get an answer today. He's likely to raise. The committee's likely to raise. The issue is how does the market respond to the fact to upcoming numbers? The inflation numbers keep going up. This morning, UK inflation came out really hot, causing a kind of a quick jarring of the markets that came out at 3 a.m. Eastern U.S. time, 2 a.m. Eastern, right at the 2 a.m. Central, right at the European cash open. The expectation was 9.9%, came in at 10.4, pretty hot, and PPI came out also. PPI came out better. Retail price index came in pretty hot, 13.8 versus 13.3. So this is what's going to drive things. Is these numbers are going to cause volatility. But today we're expecting a tremendous amount of volatility, and before a tremendous amount of volatility, there is a kind of a volatility crunch. And we're likely to just not go anywhere. You can see already the S&P has only traded 154,000 contracts. We've been trading in the 400 to 500 range during the news period, about 300 yesterday. The expectation of the mode is 280. We're well below that at 154, and that's likely to carry over. The range also collapsing overnight at 19 points. The range mode is 31. The edge of what we consider normal is 57. We're at 19. Again, these are clear indications that we need to sit on our hands and go and dust our desks and maybe clean up our monitors and whatever. Air dust our computer, our PCs, or whatever you're doing today until the decision comes out. And the decision, of course, it's not recommended to trade that Although I would highly recommend considering event contracts for this kind of day. If you have an opinion on the market, the max loss or gain is $20, no leverage, and this is a way for you to participate. Not that I'm trying to promote the product, but I really think there's a strong place, and it should not be, these event contracts should not be dismissed. So on days like today, if you think the market is very likely to push into 40.90, then you probably should get into the event contract and pay whatever it is right now, probably a couple $3 for a payout of $20 at the end of the day, something like that. Anyway, ECB President Lagarde neither committed to hiking nor finished with hiking. Government backing being explored to encourage a deal for First Republic. GameStop posts surprise profit. U.S. said there are no signs that summit between Chinese President Xi and Russian President Putin will lead to peace in Ukraine. We do get crude oil today. Crude oil has been quite a mover. And has pushed back to the 70 key area. Looking at the S&P, we've already covered it, 155,000 contracts, multi-distribution, looking more like balance. Here's what I had talked about yesterday. The primary expectation yesterday is to push the high, pull back down, and then very likely squeeze to 40 right up here. Squeeze to 40.40. Ultimately, I'm expecting it to push to 40.90 today, and then if the Fed is super dovish, we may see 41.60.70 in the next couple of days. That's what it looks like. But the primary scenario was spot on. Yesterday's ES high was at around 42, maybe 41, 42. Pretty much played out as expected. The secondary scenario is that it falls back in and it dips into the prior range, into the 3,900 handle, and then finishes somewhere around settlement. That did not happen. Here's what actually happened. Let's take a look. The S&P. There it is. Pretty choppy. Yesterday we opened. We looked like we had an open drive, and then it just fizzled out. There was quite a bit of fighting up here. And if you're a Convergent member, you heard me say this again and again and again yesterday. The 25.28, good lean yesterday. It struggled there, and then it pushed up. And again, we saw large order flow come in to sell, and it created an opportunity to get short somewhere in here, and for a push down towards the gap mid, which was a 4,475. It got just below that. We extended the range both ways. Yesterday was a neutral extreme up close. Neutral extreme up. We broke the low, actually right here, and then we broke the high. So we broke both sides of the IB, and we closed above the IB on what was a really big selling battle. There was a big spike down in the delta yesterday that ultimately ended up recovering a little bit, but there was just a ton of selling yesterday. I mean, everybody that lifted the offers yesterday found that the offers were willing to take them and add more. The overnight session since then has pulled back to about yesterday's mid and that 40.25 area right in here, the very contested area. You can see that it's just settled in here again. Order flow being what it is kind of shows us that there's really strong participation there, and then we ended up pushing higher. This drop that you see here is on the UK number. Okay, is on the UK number, and so we ended up having an inside day in the overnight session, and we're just kind of sitting against the point of control, VWAP in mid area, within about a 4-point range. We're a 4-point range from settlement, VWAP, mid, overnight point of control. Chop, chop, chop. So just be careful. Let's take a look at the overview, the big picture here. We've cleaned up last Thursday, a couple Thursdays ago, selling. This is the SBV news right here. We cleaned that up for the most part. We created poor structure on yesterday's low, which we did not revisit. And we broke out of this box down here. This box down here to the upside. So again, this is why I've been bullish in that I expect it to test a 40-40, 40-50, 40-90, and then push into 4100 for 4170 eventually. And so this, where we're set up currently, it is relatively, it's a relatively noisy area. We've moved from the lower box, just to keep our context in play, to this upper box up here. And that box is represented by this profile. You could see that we're just sitting right on this area, a magnet area, and we're just sitting sideways. So this morning is expected to be choppy, low volume, scalpy, short time frame traders in control. Not a good odds day. Pretty good day to just chill, wait for the Fed to decide. This Fed decision really relieves us of a lot of noise. Once this Fed decision is behind us, whatever materializes today is likely to carry forward over the next week or so. That's what's key. So you don't have to participate in today's action unless we see the volatilities expanding and levels, day levels, or whatever levels you use are holding. It really doesn't make sense. This is much like being a caveman and deciding, everybody's huddled up in a cave. I'm just going to go out and hunt on my own. Maybe you'll catch something. Most likely you'll get killed, because as soon as you leave the crowd behind and take on the wilderness, which is what the market is, on your own, your chances diminish dramatically. And this is the type of day that you might think you saw something awesome, but you're probably going to spend the rest of the session recovering from it. So just let the market decide. Look at this delta. I mean, this is another indication. Delta's just completely flat for the session. Yes, it's a little bit negative, but really there isn't much going on here. Everything's hovering within a few hundred lots. Within a few hundred lots of the zero line. There's just no commitment here. And why should there be? Anybody that's managing good money, anybody that's managing money that's worth their salt isn't going to participate until the Fed decides what it wants to do, until we have that information. Okay, so be on the smart side today, and go catch up on some webinars, or do homework, or start a journal, or write your trading plan or something, and instead of taking bets on this. So that's that. The NASDAQ, same kind of story. The NASDAQ's relatively stronger. If we look at the NASDAQ, it really is quite a bit stronger. The NASDAQ has pushed much bigger last Thursday out of its balance box, and it's really very close to this roll adjusted high 13068. It's the NASDAQ's way ahead of the S&P. It has cleared this key area up here, again the 12,500 in play, and it's been taken and has been left behind. NASDAQ has better structures for the most part and is continuing to hold on to the upper end of the range. See, it's really it's an inside day for the NASDAQ, but it's just staying very bullish overall. The money is going to go to NASDAQ type stocks as soon as risk on sentiment kicks in. Those are the ones that people covet and want to have in a portfolio, so the NASDAQ kind of leads things for the most part. Crude just a classic story here. We had one time framing down for several sessions, and then we broke it yesterday with a gap, unable to fill the gap in, and then we finish very bullish neutral extreme high on crude, so the expectation is continued higher. And on crude, the 70 is really important. You know, if I pull back and look at a monthly, you will see that, well, should we do that here or should we do that here? Not sure. Probably, yeah, let's just do it here. If you pull back, let's just look at a weekly. Oh, it's going to take forever loading all those ticks. If you look at it, you know, this 70 area is a key over underlying going way back into last year, and it's likely to continue to be so. So this touch of 70 is going to be resisted on the first try. We just saw that. Let's take a look at the active chart in the in crude. Look at this activity up here. The touch of 70 likely to be resisted. So you can see there's just a lot of volume kicking in here. This is the day session, or the RTH session, starting at 8 Central, 9 Eastern. And we are very likely to just battle it out in this region. There was a strong pop through yesterday's high. You could see a stop run right here against yesterday's high. Right there, you can see stops getting triggered, 80 lots and so on, right down here, 80, 50, 60, 50, 50, and so on. And then very shallow pullback. Crude is very likely to do one of these until later in the session. So that's Fed dependent as well, because crude depends on growth, and that's dependent on the Fed. So that's what we've got. I don't have any scenarios for today. The scenario is keep your hands off the damn mouse. That's the scenario. Wait for the markets to do their thing, and then if you see a continuation structure or something like that, then it makes sense to pop in. But otherwise, really, it's just not a good market to place bets today. It's just it's good to just sit it out. Okay, I don't say that often, but that's what's best for everyone. Good luck, and I'll catch you tomorrow morning. We'll talk about what happened. Take care.